Welcome back. This is Open Exchange coming to you live from CNBC-TV18 Motilal Oswal studio. Well, we are getting into pre-open and we have some initial rates that are coming in there. The Nifty, well, I think that'll have to readjust. For the time being, it's suggesting a 100-point uptick. That's most unlikely to happen actually today. Well, it's gone totally out of whack now, so let's give that a break. But let's get in Sudarshan Sukhani as well as Mitesh Thakkar, who are joining to give us their strategies. Morning, gentlemen. Sudarshan, you go first. What's your trade on the Nifty? And if you want, you could fill us in with your picks as well.
Yeah, good morning. Well, the Nifty is still a buy on dips. So essentially, it means if you get an early morning dip, then wait patiently for some kind of stability and buy. Your stops are 17,900. If you do not get that early morning dip, then you wait for an intraday dip. I think that will come. The Bank Nifty is a complete avoid for me. So it had a very narrow range day. So the Bank Nifty is a buying opportunity only if it crosses above 42,800. That may or may not happen. So it's much better to focus on the Nifty, where I would like to buy any intraday dip.
All right, buy any intraday dip. Well, the pre-opening rates are suggesting that the market is opening higher. The Nifty is up almost 0.4%. Mitesh Thakkar is also with us. Mitesh, more positive cues than negative today. So are you going with a long view as well?
Good morning. I think that's yes. We've had two lows at 17,800 on the hourly chart. And yesterday we saw when the bounce back happened, the indicators on the hourly and 2 hourly charts have started turning up. So I think it's a market which could possibly re-attempt that 18,200, 250 zone. And therefore 20-30 point kind of a soft opening should invite long positions. My stop loss would be just below 18,000. And I think on the upside, as I said, 18,200 to 250 remains the near-term target area. A breakout beyond that could suggest further upside. So then we'll have more aggressive long positions.
Gentlemen, good morning. Mitesh, in terms of specific stock ideas, what would you recommend?
So Prashant, given the fact that I have a positive view, I've gone with all buy calls today. Reliance was something which gave a good turnaround yesterday. So that's a buy with a stop at 25.74 for targets of 26.50 in the near term. M&M was, in the news, and the stock gave a very strong price and volume breakup. So that's a buy with a stop at 12.90 and look for targets of around 13.50 here. The other auto stock, which is on my radar, is Ashok Leyland. I've been recommending the stock earlier as well. Now can be bought with a stop at 148 for targets of 156. And the final stock is Ipca Labs, one stock, which is now showing signs of bottoming out. So buy here with a stop at 862 for a first target of 900.
Okay, all right. And Sudarshan, what about your picks?
Well, I have a mix. Bharti Airtel is a buying opportunity. Again, it's more of a positional trade, but the stock has been in a narrow range. It's worth buying with a stop under 800. Asian Paints is an intraday short. The stock is going through a mini bear market. Sell with a stop above 3,020. And Dabur, which has been falling consistently day after day after day, is an intraday short too, with a stop above 557. Finally, Tata Chemicals may be completing its correction. It's a buy on dips opportunity. There is a risk involved because that dip may not be eventually the final one, but it's worth trying. Buy with a stop under 957.
All right, thanks for that. Well, Tata Motors is the biggest Nifty gainer right now, so just keep an eye out on that. We'll get you more details on what's driving that stock. In the meantime, Chandan Taparia, derivative and technical analyst at Motilal Oswal Financial Services, is with us. Chandan, looks like a decent opening of trade. What are the stocks you're looking at today? Oops, I think you're on mute, Chandan. Can you unmute yourself? No, we still can't hear you, so we'll just come back to you in a bit. But let's just get the pre-opening rates settled now. TCS is down almost about 1% odd. Dipan, any thoughts on how to approach TCS now, post the numbers?
See, as I said earlier, it's difficult to call how the stock price will behave. But on the whole, I think it's a good number. And certainly the sentiment in tech stocks will start to improve if other companies also report decent numbers and allay fears about a really strong slowdown. So on the whole, I think I'm positive, constructive on the stock. And the correction certainly has given some kind of opportunity for the longer term investors to start to getting neutral to overweight on technology. You have to buy software on a contained basis. You cannot buy them when they are moving up because it's very difficult to catch a moving train per se. But I think that if global markets settle down and there's better visibility as far as the global economy is concerned, you will immediately see a pickup in tech spending, and that should benefit Indian software companies.
Okay, all right. We'll come back to you, Deepan. Chandan is with us. We couldn't get through to him with the audio earlier. Chandan, hi, good morning. How are things set up? The texture is looking a little different, right? A little more constructive overall as compared to the week before.
Yeah, good morning, Prasant and Sonia. Thanks for having me. Actually, the market is moving in a range from last 2 to 3 weeks. It is taking support near to 17,777, but at the same time, hurdles are also visible at 18,250. So we believe that we are likely to be in the broader range. And the good part is that Dow has bottomed out and that has given a consolidation breakout. So recovery in the Dow is somehow supporting to the Indian market. And at the same time, we have multiple support. Your put call ratio is slightly inching upwards. Volatility index is hovering near to 15. So because of that, dips could be bought and we are likely to be in a range. So as of now, we have to play the range. If market moves above 18,250, then only we can talk about the fresh leg of rally. So play the range on intraday point of view. Look at the support near to 18,018. Look for a bounce to 18,180 or 18,250. So need to be with this market. Now talking about Bank Nifty, which slightly underperformed, but has been respecting to its rising trend line. So we have support near to 42,222 in the Bank Nifty for a bounce towards 42,750 to 43,000 marks. Now looking at the trading setup, first that is buy on Reliance. This heavyweight counter has really bottomed out with support of 2,500. We have seen huge put writing activity and core unwinding started to see a 2,600 strike. On last trading session, when stock has really done well, the open interest has fallen by 6%, which clearly indicates short covering in the counter. So it has taken support, surpasses falling supply trend line, given a consolidation breakout of last 10 days. So rally can extend to 2680 to 2700. One can buy with a stop loss of 2545. Next trading area, that is buy on M&M. This stock has really given a breakout from its descending triangle formations, which is having the bullish implication. We have seen huge open interest addition of around 12 to 15% in last 2-3 trading session. And this is one of the strongest counter which is forming the pole and flag pattern on the monthly chart and giving a scope of 15 to 25% on upside on positional point of view. But for 2-3 day point of view, recommending to buy with a stop loss of 1285 and looking for a target towards 1360. One idea now that is on sell side, that is sell on trend, making lower top, lower bottom. Shorts are being built, call writing is visible, looking for 3 to 4% downside, can sell with a stop loss of 1280. And here we have a target towards 1200 levels.
All right, Chandan, thanks very much. Actually, one more name from that fashion retail space that I want to put out, and this is the market laser, is ABFRL. I'll keep it very brief. ABFRL, and I wanted to put this out same time yesterday, but just look at the chart. This is a simple trend line all the way from the lows of 2020. May 5th, 2020 was the low on ABFRL, which was around, 96 rupees. It's consistently traded above this level. There was only one test of this level, if you kind of come back, if you have the graphic back on, in June of 2022, in the market correction that we saw. And then the stock bounced off those levels once again. Can we have the stock up, please? I mean, I think, okay, we'll have it up in just a bit. So this is ABFRL. And yesterday, that's the chart I'm talking about. And yesterday, it kind of broke through. Actually, it broke through this level on Friday, but it looked tentative at about 281 or so. But, even as yesterday the market was rallying, ABFRL failed and closed, I wouldn't say decisively, but it closed below this level. So this is now, in a way, make or break. The market looked very constructive. The stock yesterday saw almost a 12 rupee swing from the day's high and closed under this trend line. So it's a crucial zone. So let's keep an eye on this one, purely on how the chart setups are really standing out at this point. Sudarshan and Mitesh are with us for their quick 9-10 calls. Mitesh, to you first. What do you have?
I think I'll go with a buy on M&M with a stop at 1290 for targets of 1350.
Sudarshan, what about you?
Buy the Nifty only on a dip. Buy Bharti Airtel with a stop under 800.
All right, by Bharti Airtel. There was a big CLSA upgrade yesterday on that. But Nimesh is joining in to tell us the standout brokerage report of the day. Nimesh, over to you.
Hi, Sonia. So today's standout is on auto. Some interesting upgrades coming in from BofA Securities. Today they've upgraded Tata Motors and TVS Motors to buy. On TVS Motor, they have a target price of 1250, and on Tata Motors, the new target price is 460. However, they also, the preferred bets in the auto names are Maruti and Ashok Leyland. Now, the key themes what they are advising clients to play. One, they believe that the valuations are at near mean or tad below, and there is a meaningful upside in terms of earnings. So that's a big theme. And in terms of individual companies, the first theme is good model cycle, and there fits in Maruti. The new SUV launches and regulations means that they're going to gain market share. That's on Maruti. The second big theme is laggards, which are doing well. So in that, they're betting on Ashok Leyland. They believe that Ashok Leyland is gaining market share, and the CV cycle is in an upswing, which is surprisingly positive to them. So that's the reason they've upgraded. They have a buy on Ashok Leyland as well. And the third is stocks which offers credible EV plays, and there fits in both TVS Motors and Tata Motors, and hence upgrade to buy to both the stocks. However, they've downgraded Hero Motor to a neutral, and they have an underweight rating on Escorts.
Sure.
Now, the only thing is on Tata Motors, they believe that the stock at these valuations is giving a negative value to JLR, which is bearish, and hence an upgrade on Tata Motors as well.
All right, thanks a lot for that. That's just in time for the market opening. And the first tick on the index is absolutely flat. So the Nifty is now down about 10-13 points. Very, very quiet opening. The mid-cap index is trending a tad bit in the green. The big mover is Tata Motors, 3.5% higher after that strong rise in JLR's wholesales in Q3 and some upgrades coming through as well. There's a record order book that JLR has posted, remember, so that is really driving the stock higher. Apart from that, you have M&M that's up about 0.5%. It was the big mover yesterday as well. Very bullish plans in the electric vehicle space. And then you have a whole host of metal stocks. There is Hindalco, there's JSW Steel, Tata Steel. This whole reopening of China trade is something that's taking that entire pocket higher. Then you have the Bajaj twins that are making a bit of an attempt to recover. So Bajaj Finserv is a tad bit in the green. Bajaj Auto is also up almost about 0.5%. Yesterday, you had participation from the likes of L&T, Reliance, the other heavyweights. L&T is chugging along this morning as well, up about 0.2%. Now the market is sinking a bit. The Nifty is down about 37 odd points. It's TCS that's dragging down about 2 odd %. Remember, TCS did say that there is some slowdown as far as decision making is concerned, and certain pockets like Europe are seeing a bit of slowdown, and hence that's a caution point for them. The street is looking at that a bit nervously. Remember, TCS was up over 3% yesterday as well. So this morning there is some profit taking there. In fact, it's dragged down the entire IT space with it. So Infosys, Tech Mahindra, Wipro are all down about 0.3%. So keep an eye out on that. Asian Paints is the other one coming in for a bit of profit taking this morning. HDFC Bank, ITC, IndusInd Bank are also a tad bit in the red. But TCS tops your list as the biggest loser on the index and dragging its feet on the market. A couple of banks as well. The Bank Nifty is down 120 points right now, led by Kotak Mahindra Bank, ICICI Bank, SBI, all in the red this morning, and dragging HDFC Bank as well, dragging the market lower. So it's a muted start, a slightly weakish start led by TCS as well as a lot of the heavyweight banking names. So let's see. For now, the 100-day moving average is holding, but what's happening in the broader market?
Well, the broader market, Sonia, is doing a relative outperformance just for starters. But a quick word on the index itself. The Nifty, actually, it's good news for the bulls that we've opened up and we're down a little bit. Otherwise, if it gapped up and we sustain there, there's no chance of getting in. So I think, if the market moves a little bit lower, maybe to around that 18,020, 18,000 odd mark, it'll be a favorable entry point from a bullish perspective. Well, focusing on a couple of other names, then you have Tega Industries from the mid-cap space. Well, there was a resignation out there. So that's opened up with a cut of around 2% approximately. You have KRBL and L&T Foods, both of them have opened up well in the green. For KRBL, there's a bit of a marketing exercise out there. They've launched an initiative to convert customers to choose branded products. But both those two, companies, well, they have opened up well in the green. A couple of other names as well, just to highlight. IRB, well, the collections were pretty okay, so that stock should be in focus. IRB as well as the InvIT out there. And from the metals pack, well, Nalco has opened up in the green. That's up close to 2% as we speak. Hindalco as well has opened up in the green. So good news on that front. Nifty down 50 points, mid-cap index as flat as can be. Prashant.
Absolutely. 1:1 advances to declines ratio, exactly 1:1. 880 higher, 850 lower. So this is neither here nor there. TCS, of course, is the pressure point that is clearly not helping. IT was the big lift yesterday, and it's the drag today, at least at start. And rightfully so. I mean, the commentary doesn't lead you to jump in and buy the stock or anything of that sort. It's not bad, it's not good, but the fact is, it doesn't excite you or want to kind of, jump in straight away. This time, I mean, the repair, etc., will take time. I think that was a basic message coming in from TCS. I heard, description as glass half empty, and I think that kind of best describes it. Infosys is down about 1.5, so this is, all of the next to the IT stocks which will start to report numbers, which I think is important. IDBI went up quite a bit yesterday. Of course, on the back of the story, we've been tracking 3% lower. Stocks at about 57. Godfrey Phillip is down 2% on volumes 2,083, 2,084. Bank of India is down about 1.25%. Stocks at about 94. Persistent is down about 1%. And I can go down, but then volumes are a little lower down the list. On the upside, there is, of course, Tata Motors, which Sonia has been telling us about. 407 on Tata Motors. It's the biggest volume-led gainer. And I think, has there been a block? I'm not sure, but the volumes for this time of the day for Tata Motors are very large. Look at that, 7.4 million shares on Tata Motors. We'll try and get you details of that. And of course, the metal names, dollar is weaker, 1.5 lower, the dollar index in 2 sessions flat, and that is helping, providing comfort. Sona Comstar is another one, which is up 3% at this point. Tata Motors DVR is, of course, higher as well. There is Max Healthcare, which is up 2%. Bharat Gears is up about 2.5%, and so on and so forth. So this is it's not a bad start, but 1:1 advances to declines, and the Nifty is starting about 50 odd points lower, dragged, of course, largely with what's happening on TCS and IT this morning. Sandeep Bhatia is joining us now. He's head of equity, India and country head at Macquarie Group. Sandeep, great to have you with us here. Thank you very much for your time. Let's just start with tech, since TCS has reported and we've now heard from the management. Where does that leave a potential investor at, Sandeep, in your opinion? Buy in smaller quantities in a systematic way? Is that the way to approach the space? Go on.
Yeah, I think continue to buy IT in small bites over a period of time. I think the real message to us was the fact that the US is not falling apart as much as people thought in the middle of last year. There is definitely pressure on the BFSI space that will have some impact on the IT sector, but overall the companies are still saying that they are able to manage. I think this is one sector where valuations are still in favor of us, the investors. I would continue to buy this in small quantities. It may not be, it may not give you immediate performance in the next 2 months, but I don't expect the market to be a big outperformer this year for India. So this is good quality names which you can continue to buy.
Okay, well, let's just draw your attention to Tata Motors as well, almost 5% higher now on that stock. But remember, it's had a steep fall in the last many months. It's been a big underperformer in the auto segment, and it is now still far off from its 52-week high of 528. Just wanted your thoughts as well on this, Sandeep. Good morning and Happy New Year to you. Some of these electrification plays are doing very well now. There are some upgrades that have come through on TVS Motor. Tata Motors is having its, day out in the sun today. Do you like this entire pocket, and what do you do here?
Yes, we like Tata Motors. We like it for the India business. JLR was a big surprise, the free cash flow generation that happened in the results that just came through. So I think to that extent, JLR was the big positive surprise, which is why the stock is up. But JLR still remains the biggest challenge structurally for the business. We buy Tata Motors, we like Tata Motors essentially for the India business. One thing that I want investors to understand, that as we go towards electrification, the entire automobile proposition for the buyer is changing. If you see what was unveiled in the Consumer Electronics Show in Las Vegas just last week, we saw that Sony is combining with Honda. We are hearing rumors of Apple launching cars. So essentially what is happening is the automobile is moving from focus on engines and transmission to the consumer electronics experience. And that's why we have companies like Sony and Apple coming in. Even BMW unveiled its concept vehicle. which is all about talking car, about exterior colors of the car changing. So this is a much different consumer proposition than the automobile that we currently know about and buy. Whether a JLR can actually move into that kind of a world is the big question mark. But what we definitely see is Tata Motors electrification play makes it a very dominant player, over 80% market share in the EV market in India. And that's what we like, and that's what we'll buy the stock for.
Okay, all right. Hi, Sandeep. Noted that view on Tata Motors. What about earnings? That's going to be the driver ultimately of markets. And at some point, the street was a little bit skittish whether we'll get that mid-teen growth. But what are your estimates for the coming year? Because these 2 years, FY23, FY24, were supposed to be good years, and then we take it from there. Your sense? Yeah,
so our sense is we see those kind of earnings of mid-teens come through, but what we structurally like is stocks which are more domestic focused, and to that extent, definitely we have seen the markets favor M&M to some extent last year. I think this is a time to actually take a break a bit from the automobile sector and focus on other sectors which are coming through. So the big thing for this year would be actually a bit of a reset in portfolios. And to that extent, autos may just be a market performer.
And earnings, mid-teens is what you're working with for FY24 as well? Not scale back a little bit?
Yes, around that. So we may have to see our numbers again, but that's what we have been at.
Sandeep, what are foreign portfolio investors telling you about their intentions for allocations to India for this year, 2023, incrementally over what's happened in 22?
So what we are seeing from foreign investors is definitely a big focus on China. China is the flavor of the season, especially with the opening up which has happened. First quarter, we see flows moving towards China. We see selling come through from foreigners on India. And that's definitely one reason why the markets continue to be flattish. And at least for the first half of the year, we will definitely see reallocation. Valuations are definitely in favor of China. There's a big opening up play while we see all bad news around infections, COVID infections right now in China. That's something which investors are willing to look past and bet on the fact that China will open up majorly and definitely become back to higher growth rates by April, May, June of this year. So that's something which is why China will be the flavor of the season the first half of the year. India will definitely be impacted to that extent.
Okay, China will be the flavor of the season. I think that's the common narrative, right? Where do you see alpha generation? I know that's a very tough word these days, especially for fund managers. But where do you see the alpha in the market now? I mean, which are the pockets, which are the sectors? Where do your own preferences lie?
Banks we have liked and we continue to like, and that's one sector where alpha can be generated. The big question will be IT. We have liked IT and we continue to back that. The numbers in the next couple of weeks that we are going to see, the next couple of days actually, will also give us some pointers, but we continue to like IT. So definitely the stocks we like are more centered on moderate valuations and earnings which are defendable. So that's where we are.
Sandeep, what about the new age themes? You were avoiding them the last time we chatted, but you were waiting for them, to indicate maybe a move towards profitability, maybe a better outlook out there. Still avoiding them, or are you giving them a second look?
No, we are continuing to avoid these names. Valuations are against you. Flows are anyway going to China. So to that extent, these themes have done their bit last year, and we would avoid it.
Okay, avoiding the new age themes, and that's really been, the hated sector actually of 2022. But what did well in 2022 was the PSU banking names. And I think you all were drifting towards SBI as well as BOB, the top two in PSU banking. Well, what's your sense at these valuations? Still there's comfort?
Yes, banks we've broadly given comfort. We always have preferred large cap names. So, we like HDFC Bank and we like ICICI. So definitely those names we continue to like. But yes, even in the PSUs, the large cap names, SBI and BOB, we are going to stick with that.
Sandeep, I have to ask you maybe the first of many budget questions, but the budget, of course, is not very far away, right? Anything to your mind which kind of stands out? The thrust has been, it's interesting, right? Because last 2 years, we've seen a big upheaval in global supply chains. And the attempt here in terms of policies has been to help Indian factories get a place in these supply chains. The PLI scheme and other incentives which various sectors have received. The market also likes the idea that maybe we will see a manufacturing revival at some point. Is that something that you would watch out for? What are your thoughts?
So I think the PLI schemes are clearly something which India has made a big move on. It's still early days to say whether there's a real long-term success in terms of raising the share of manufacturing, raising the manufacturing employment which is happening in the country. But the current view is that we have seen some early signs of success. I would think that this is therefore going to continue as far as India is concerned, and we will definitely see more of this happen. The big question for India is not only the manufacturing for exports, but also the entire domestic manufacturing. And this is something which would come through for the budget. I hope we see more of that come.
Okay. Wanted your thoughts before we let you go on some more pockets. Consumption, how are you feeling about that? The growth has been slow, especially from the rural pockets, but some companies like Godrej Consumers continue to see gross margin expansion. They spoke to us yesterday and sounded, decently optimistic. What are your thoughts here?
Yeah, Godrej we also continue to like. I think it has had a bad patch and it's now coming back. So it's relative compared to its recent past that it's doing better. But broader consumption will still remain weak. I think we have had a slightly much warmer winter than usual till now. And that is probably an indication of the fact that the long-term climate cycle is is changing. If we don't see a great monsoon this year, which happens when we have warmer winters, then definitely agricultural output will also be weaker. So to that extent, I would be very cautious on consumer right now.
Okay, cautious on the consumer space. All right, we will leave it at that. Thanks a lot for joining in, Sandeep. Have a great 2023. Of course, we'll continue speaking with you through the course of the year, but hope you have a good one. The market, by the way, is not having a good start at all. The Sensex is now down almost 300 points and the Nifty is down about 78 points. The Bank Nifty is the one that's exerting all the pressure, down 260 points in trade right now. But let's move on. The recently approved National Green Hydrogen Mission has also set the renewable space abuzz. To discuss the potential here for a company like Thermax, we have Ashish Bhandari, the MD and CEO of Thermax, joining in. Ashish, thanks a lot for joining in. Although it's at a very nascent stage, this whole green hydrogen adoption, I just wanted to understand from you what the opportunity is for a company like Thermax and what are the kind of investments that you will have to make over the next couple of years.
Hi, a very good morning to you and to all your viewers. The space of green hydrogen is very, very exciting, not just for India, the world over. And I'm sure many of your viewers know, India is actually following some of the major announcements that have happened in the US and several other parts of the world, where there is significant governmental support coming in to push green hydrogen as a new industry. For India specifically, India is targeting with 20,000 crores worth of governmental support that India within the next 5 to 6 years starts to produce 5 million metric tons per annum of green hydrogen. This will happen in the domestic sector in 3 primary industries: in refining, fertilizers, steel, and then some amount of city gas. Those are the initial targeted segments. Beyond this, transportation and other spaces may evolve as well. Adjacent to this, there is an attempt by about 5 different Indian companies to kickstart a big green ammonia export business out of India. Yeah, so this is going into Western economies, into Japan, Korea, the way LNG ships used to be transporting natural gas, green ammonia being transported in big tankers. For a company
Ashish, yes, actually, I was coming to that. If you can just quantify for us, for a company like Thermax, where do you fit in this value chain? And what kind of opportunity do you see in the next 1 to 2 years?
So all remains to be seen, too early to speak about. But broadly, there are three opportunities. The first one is for EPC of green hydrogen projects, because these are all beyond the electrolyzer. Several other components that are needed are all things that Thermax understand very well, including putting the electricals together, all the gas conditioning, gas cleaning, the input output, all of that can be handled. So the entire EPC portion of such projects is one very, very exciting space. Second, when you come to the key technology itself, there is technology around biomass to green hydrogen. That whole space Thermax is actively working on. And even on the electrolyzer space, it's an area that many Indian companies, including Thermax, will look at. How do you localize? How do you manufacture? And not just the electrolyzer, several adjacent components that are part of the ecosystem of doing green hydrogen projects. All of those would be important and relevant. Third, for industrial customers, where Thermax today does power, steam, and other portions, looking at build, own, operate. But these are for small industrial applications. I would say all three elements of this, all these three things that I talked about, are all work in progress. I don't think anything's a slam dunk. The entire industry will evolve over the next 1 to 2 years.
All right. Hi, Ashish. Morning. I think the street has been waiting for some kind of announcement with regard to a technical tie-up in the direction that you're talking about, this push to green hydrogen. Have you made any progress? Could we hear about an announcement maybe in the coming quarters? A rough timeline by which I think you were working on a technical collaboration, right? You all were looking out.
So not just us, I think almost everyone in the industry is looking to figure out their partnerships, their lead-ins. Too early to talk about it, and when something happens, should something happen, you will definitely hear about it. But I would say it's work in progress, nothing absolutely imminent right now. And there's a good chance we may not find the right partner here, because the right partnership is a mix of not just technology that is available today, but a very long roadmap of somebody that can stay current with the technology. When we are ready to share, we would definitely come out.
Ashish, good morning. But the tie-up is for the electrolyzer itself, right? Because the other stuff you already do, and you said you'll be the EPC part, etc. You can do straight away.
So in this whole system, there'll be several partnerships that will be needed. The electrolyzer is one key part. In the biomass to hydrogen, there are a couple of key partnerships that are needed. If you're going to do green ammonia, then a partnership is needed on the green ammonia technology side as well. So electrolyzer is just one part. There are several other parts that are also important and relevant. And quite possibly, actually, with all the competition on the electrolyzer side, some of the more exciting parts could be on these adjacencies that exist.
But in this entire value chain, the bulk of the value is in the electrolyzer, sort of the electrolyzer itself, or no, not really?
Actually, the single biggest part is solar and electricity. The almost 60% to 2/3 of the value of generating green hydrogen lies in the cost of electricity. After that, of what remains, about another 1/3 to 40% is electrolyzer. The other 60% continues to be the balance of plant and everything else. So there's a lot of focus on the electrolyzer, but in the grand scheme of things, it's just one part of one piece of a much larger overall puzzle.
Sorry, when you say 60% is the cost of electricity, could you just explain that? Sorry, I mean, what do you mean by that?
Because to produce green hydrogen, the electrolyzer needs electricity to come in, green electricity, which it splits into hydrogen and oxygen. So you need clean water, you need the electrolyzer, you need all the electrical stuff, the gas conditioning, the gas cleaning. But the biggest portion, what you need is cheap green electricity, which is coming in. And if you remember, the first part of the green hydrogen announcement was all about interstate distribution charges, banking capability. So all of this. So the green electricity portion has a big role to play, because at current prices, green hydrogen is significantly higher in cost compared to gray hydrogen.
I'm glad you brought that point out, because I wanted to take that point forward. You know, we keep talking about the opportunities, but there are several challenges as well, right? There are cheaper alternatives like grey hydrogen. There's a complete lack of policy framework, and there's also, you know, lack of R&D as well. Do you think all of these would be sort of roadblocks as far as investments in this sector go? Do you think it will become unviable to invest in this sector because of these challenges?
I think the investments will have to come. Yeah, because if India is not leading, then we will be lagging, and the world will move towards green hydrogen. Completely agree with you that there are a lot of roadblocks that still remain. The government's chipping away at them one by one, but there's still several that remain. One of the key ones which is anticipated which is part of those 13,000 crores of that 20,000 crores, is getting certain industries to mandatorily take green hydrogen as part of their deliverable. And it could mean that the refining industry, the fertilizer industry will take 5, 10% or whatever small numbers, but they're mandated to take that. Yeah? So that will kickstart some portions without increasing the cost to those industries significantly. We know through our discussions that industries such as steel are still very reticent. They're okay to experiment, but right now nobody really wants, after the inflation cycle that we have gone through, nobody really wants to add cost where there is no payback. So green steel will have a payback, carbon trading and carbon mandates will come, but the timing of those is uncertain, and that means the takeoff from some of these other industries is also uncertain.
All right, Ashish, we have got a fair idea about the green hydrogen push. But before we let you go, we'll talk post-year numbers as well. But how have inquiries been on ground? There were signs that it was flattening out a little bit. Has it improved, or have you seen a further softening out there? Just, you know, broad qualitative sense from you.
No. Broadly, it is not all gloom and doom by any means. I think India continues to be holding its own. Demand continues to be reasonable. Some of the bigger projects, as I had said, in especially the government ones in the refining industry, we had gone through a wave. That wave is gone, which is why you don't see as many big announcements from Thermax. Beyond that, we are very happy with the state of our overall business as things stand.
So we are seeing inquiries continue, right? It's not showing signs of plateauing out.
Very much so. I think the growth rate may have slowed, but the place that we are in continues to be at a much higher place than where we were even pre-COVID. Yeah.
Got it. Okay, always good speaking to you, Ashish. Thanks so much for stopping by. We look forward to having a chat with you, maybe post your numbers, and then we could focus more on the numbers as well. Well, for the time being, the market's at a very, very important zone at around that 18,000 odd mark. The bulls will want this level to hold out. Let's see whether or not that does happen. For the time being, slip into a short break. On the other side, we analyze the expectations from the pharma space in our Q3 special, Quarter Se Quarter Tak. Ekta will be waiting with us, and also we'll be joined by Vishal Manchanda, pharma and analyst at Systematics Group.